Testing 0 1 1 2 3 5 8 13 21 34 55 89 144 233 377. Hey, welcome to the Daily Effects presentation on how to improve the timing of your trades. In this presentation, we're going to focus on how to use Leonardo Fibonacci. Now, what I went through was the Fibonacci sequence, but what we're going to focus today is Fibonacci ratios. Yes, Fibonacci can be a leading indicator to help you plan your trades using the leading indicator. In any case, hey, let me remind you that the purpose of this presentation is education. There are no trade recommendations, but I am here to teach you how to do technical analysis and use Fibonacci to create trade plans. Do not trade real money until you have a track record of success using a demo account. My name is Wayne McDonald. I'm the Chief Currency Coach of FXBootcamp.com. I'm also a Commodities Trading Advisor, which means the National Futures Association deems me an expert in fundamental and technical analysis. I can and legally am able to advise professional advisors like hedge funds, and I can certainly help amateur traders as well. My company is FXBootcamp.com. We provide live training and analysis as the market is moving. So it's all real time. We teach you how to create trade plans and trade setups and teach and teach and teach. No trade recommendations, but teach you how to think and trade on your own using sound, fundamental, and technical analysis. Also, a lot of the tactics that I'm going to go through in this presentation are also available on my book, which is on Amazon.com and is top seller in the Forex category. Now let's go over very quickly my chart setup. I use a 2155 EMA to measure speed of market action, and I use the 5/8 EMA SMA combination to measure the momentum of price action. 200 EMA to measure trend. I use Bollinger Bands set at 2 standard deviations to measure volatility, and then I use oscillators. MACD slowed down at with its custom settings of 2155/8, and stochastics is sped up at 835. Now again, I use the 2155 to measure market action and the 5/8 to measure price action. So I separate price action from market action. Now using the oscillators, I slow MACD down, and that shows me overbought and oversold conditions of the market, and I speed stochastics up so it shows me overbought and oversold conditions of price. So throughout throughout my trading day, I'm constantly separating and aligning market action and price action, looking for the best trades. Now the thing is, moving averages are lagging indicators, which means they're measuring past candles. Okay, they lag, so they're looking at the last few candles and they're trying to give you this average. So they're always lagging. This is what a 2155 looks like. 21 is orange, 55 is blue, and like I said, they measure market. Okay, so it shows me for a while up here the market is up, and then it crosses down, and now technically speaking the market is down. In those situations, I'm looking for opportunities to short. Okay, now they are lagging. You can see the market had been falling quite some time before it technically was a down market. Okay, therefore I'm trying to also look for price action, and that's what the 5/8 represents to me, and it crosses all the time. Now remember, overall and generally speaking, when this was rising, the market was up, so I'm using the 5/8 to look at price action and go long when price action is also up. And then all of a sudden we get this double top and price action is down, and it wasn't until in here somewhere where the market technically was falling, but you can see price had been falling well before the market started to fall. And again, when I'm timing the entry of my trades, I'm looking for alignments of the two. So this was a little riskier, what I call centripetal momentum, and then once they're aligned, there's centrifugal momentum. So this is a much better trade than here, but both were very good. Okay, and that's what my charts would look like when you add oscillators and all the moving averages. So trend, market forces, price action. Okay, now the problem with moving averages is that they're lagging. Again, what I'm saying is they're measuring past price and time measurements. What happened in the past? Well, what happens in the past doesn't always necessarily tell you what's going to happen in the future. They just show you high probabilities, right? But they are a little slow. I mean, technically speaking, they're lagging. So what if we had a leading indicator? Something that would predict the future ahead of time. Well, would that be helpful to your trading? Well, that's exactly what Fibonacci studies are. Now, we're going to look at ratios today. Height. Yeah, we're going to look at ratios today. And as you can see, I've used Fibonacci here. Let me show you the study I'm using on the platform. I have what we call, and what you do is you measure swing highs and swing lows with this thing. Nice, right? Swing highs and swing lows. Very nice. So we know by definition of an uptrend that price makes a high and then a higher low and then a higher high and then a higher low and then a higher high and then a higher low and a higher high and a higher low. Okay? Each time higher highs and higher lows. That's an uptrend. Well, what's interesting about this is that even when you're in an uptrend, price falls. Very interesting. Now what Fibonacci is going to do is going to measure the distance from a new high from its old low. And what we're going to try to look at is what ratio is the new higher low going to be? How far back is this pullback? That's all Fibonacci is going to measure. Okay? And you can anticipate how far it's going to fall. And we're going to look for these things. Okay, we're going to look at the ratio between the new high and where the next low is going to be, and then the new high. And then you can guess on where the next new higher low is going to be, and so on and so forth. Well, this guess is an educated guess, and that's why it's a leading indicator. So even though price is just starting to fall way up here, so let's measure, okay, there's a bottom somewhere in here, right? And here's the new top. And what we're going to look at is how far back is price going to fall before it rises again, okay? And they're going to be educated guesses. And they're leading indicators because even though, let's say, price is still up here and you're expecting it to fall, you might be watching this line, and this line for likely places for price to find support. And in fact, you can see these lines here. Okay, this is a 50% line. You see the double bottom? This is a 15-minute chart for Euro USD, and it's today. I didn't go back 1,000 years looking for a perfect trade setup. This just happened a couple hours ago. Okay, so as price is falling down in here, you might still be bullish, and you're asking yourself, well, I wonder where it's going to bounce and head back up. Look at this. This is a 50% line. You get a double bottom on a 15-minute chart, and it's exactly 50%. 50% of what? The new high from the low, the previous low. And we're guessing on where the next low is going to be. Remember, it's an uptrend, so we're looking for a higher low. Well, if that's the old low, maybe this is going to be a new low. Well, how do you know it's going to be a new low? Well, you don't. But look, at 50%, it's exactly halfway, and then you get a double bottom, and then price suddenly is not making any lower lows and starts heading back up. Exactly 50%. Now, some bullish traders may have sat on the sidelines waiting for something like this to happen. Do you think it's a coincidence that exactly 50% we get a double bottom, and then all of a sudden, notice, here I'll clear these lines, notice that for the first time we don't get a lower low. See, this is a downtrend, right? So you get a high and then a lower low, and then a lower high and lower low, just the opposite of an uptrend, right? So here's an uptrend, and here's a little mini downtrend. Then we hit this 50% level, right? All of a sudden we don't get a lower low. Double bottom, right? And then all of a sudden we get a higher low. And then all of a sudden we get a higher high, higher low, higher high, and all of a sudden we're back into the uptrend. Isn't that interesting? Well, you could be trading both ways like a broken gate, up and down, you're all over the place. Or you could say, I'm a bull, and you trade this big move, and then you sit on the sidelines waiting for price to bounce somewhere, you know, and then of course right at the 50% level. That's a nice little fib level. So let's talk about what fib levels are important to me. Okay, the first one is 38.2%. Okay, and that's measured by this first line right here, a 382. Okay, and what's nice about the MT4 platform is that it actually labels it. So you can see it here, 38.2 is that first line. Okay, that's important. If price is in an uptrend, let's say, and it only comes down 38.2 and then starts heading up again, it's so strong that when price is falling, people start buying it up again and it starts moving up. You see what I mean? It's so strong that every little tiny pullback, all the bulls are jumping back in and buying more. That means it's really powerful. Now, what if it falls a lot? What if it falls way down and way down? Well, that means not many bulls are rebuying. Okay, and so what we're looking for is smaller pullbacks, mean higher highs. Now the next level is at 50%, so you can see the second line, and you can see over here it's 50%, 5.00. Okay, the third level that I think is important is 61, right? 0.8, a 618 Fibonacci retracement, 61.8%. That means price, if you measure the low to the new high, if price falls 61.8%, it would bounce here and then head back up. These are Fibonacci ratios. We're measuring ratios. 61.8, not 62, not 60, 61.8. I'm telling you, if you do this technical analysis, you'll be shocked how often this happens on various time frames, from a 1 minute to a daily to a weekly chart. I see these levels being important. Okay, and you can use this in anticipation. You're looking for bounces like this. That's why it's a leading indicator. So maybe you cash out on the failure to make a higher high up in here, and then you fall, and you're like, you know what, I'm bullish on the Euro USD right now, so I don't want to short. So you don't short. That's called discipline to carry out your trade plans in the direction of your bias. I like that a lot. Okay? And then you're sitting around and you're like, I'm waiting for my next opportunity to buy. I'm not sure where it's going to be. And all of a sudden you get a double bottom, and it's precisely, look at the close of the real bodies of these candles. You see that? The wicks might have gone below 50%, but not one close of the real body candle. And these are 15-minute candles. So for for a full hour, we were at this held at this 50% line. It had up, and then again for another hour, we're at the 50% line. Okay, so 8 candles failed to break that 50% line and then headed up. Do you think anyone happened to be waiting around for that Fibonacci retracement? Very nice, huh? And then off it goes. Now, it didn't go very high. It went to a Fibonacci extension. I just want to show you that this works in many, many, many ways. So let's go to let's do a different one. Okay. So again, what you do is you take a high and a low. Swing high or swing low. Okay. Let's move it to this double bottom. Okay. And I'll use real body. We'll do it that way. Okay. Good. Okay. So here's a high. And here's a low. So you're a bear, right? Are you a bear? Check this out. The new lower high, which is part of a downtrend, is exactly 38.2%. Exactly 38.2%. Then you get a 5/8 cross to the downside. Stochastics falls, MACD falls. So you got MACD down, you got stochastics down, you got the 5/8 down, and the current lower high, the current high is exactly 38.2% of the new low and the old high. Interesting, huh? But what if we go right in little things? What about that swing high? Look at this. I don't know if you can see. I'll have to zoom in. But there's the high, and there's the new lower low, and the new lower high is exactly 50%. And then the 5/8 crosses, Stokes crosses, MACD crosses, maybe you trade. Okay, interesting. So you measure that new low now, with the old lower high, and guess what? Green pullback is a 50% to 618 retracement, and then it falls again. Okay, then you take this low, let's do it this way, this low, and the next lower high, and lo and behold, once again, 50% retracement right in there, and she falls. You see that? Right in here. So over and over and over again, price is down, it rises, and then it falls again. Okay? So remember, In here, you had a series of lower lows and a lower high, and a lower low, and a lower high, and a lower low, and lower high. It's working over again. So what we just measured on these these are 50-minute candles. So it's down for an hour, and then up for 45 minutes, down for an hour, up for 45 minutes. So it's like down, and then exit, take some profit, let it rise, and look for a new opportunity to short. Boom. Essentially, it seemed like it was, down, back 50%, down, back 50%, down, back 50%. Another way of looking at it is 4 steps down, 2 steps back. 4 steps down, 2 steps back, right? Or 2 steps down, 1 step back, 2 steps down, 1 step back. But what we're measuring is that distance, and then soon as you see that it's a 50%, which is important, or a 618, it's important, and then it starts to fall, go ahead and short. All right? What you're looking for is a pattern. Down, 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 up, up. Down, 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 up, up. Down, 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 up, up. See, if you have a trade plan, you're actually waiting, in this case if you're bearish, you're actually waiting for green candles to short. Because you don't want to short at the bottom, right? So once it turns over and starts to head down again, you want to short at the top, and it sure makes you feel confident when you waited for it and it's exactly 61.8%, right? And you say to yourself, well, I'm not the only guy in the world waiting for that opportunity, and all of a sudden you start to see red, short, and then put your stop right up here. Very little to lose, a lot to gain. Isn't that interesting? So, I don't know. Do you want to keep going? Remember, this is today. This is just today. I ain't making this up. This isn't smart here. This is just what happened today. How about this? Swing high, right? You can obviously see that's a lower high. Now remember, that lower high is 38.2% of this low and this high. So you already knew that 5A cross and that Stokes cross and that MACD cross is going to put you short, right? So now you make a new lower low, and then it starts to rise again, right? So down, 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 up, up. What I was saying to you, if you're a bear, you love the up, up part because you're looking to either enter a short on the up, up as soon as it starts to fall again, or enter a second trade and reload it, right? Add more to it. Keep adding more. It might be your strategy. Well, look at this. So you take the new low and the new high. Guess what? Look at that. Exactly 61.8. Not 62. Not 60. 61.8. And then the son of gun starts to fall in here and makes a lower low. That's just today's action on the pound dollar. I'm not picking out some weird pair, and this isn't from 3 weeks ago that I studied some chart and said, wow, there's a lot of Fibonacci ratios here. I wonder if I could use that as an educational tool and show the world how smart I am, but I couldn't possibly do it in real time. I do this all the time in real time. Okay, and what's interesting is this is just the Euro USD 15-minute chart from today. Just today. I mean, nothing special, nothing amazing, quite straightforward and almost boring. And we've measured, we've measured these big moves, this big move, but also all the little moves inside of moves. Okay? All you have to do is line them up with your bias, whether you're a bull or a bear. It'll really help you on direction. Okay? Isn't that neat? So I'll do another video on how to use extensions. I just wanted to show you how to use Fibonacci retracements. Remember, a leading indicator. So if you're a bull but price is falling, chill out and relax. Okay, chill out and relax. Because if you're a bull and price is falling, if you use Fibonacci ratios, maybe a great, fantastic opportunity to go long is nearby. Use your Fibonacci to measure the swing high and the last low, and look at those ratios. Okay, the thing that I look for the most, the thing that I'm looking for the most is any entry between a 382 and 618. So what I'll do is I'll draw a little circle in here. 382, 50%, 618, my absolute favorites. And once I see price sort of get rejected at those levels, and then start to, in this case in a downtrend, start to turn red again, boom, pull the trigger, put a stop right above that swing, and hope and pray that I'm right. But in that case, I'm using sound technical analysis to enter my trade in the direction of my bias using a leading indicator, and then I can go and reconfirm all these things. You'll see that the moving averages and oscillators will also confirm that. So in that case, I'm not guaranteed anything, am I? But I know that I'm using a leading indicator and Fibonacci ratios to set up a trade in my direction, and then very often it's confirmed by lagging indicators like oscillators and moving averages anyways. And my level of confidence is high, and since I'm entering my trades very at logical areas and protecting them with stops that are very nearby, you know what? I'm entering very solid trade plans and risking very little because my stops are fairly close. And now that once your trade is in, guess what? The place, or depending on what your Fibonacci retracement ratio was, you can also use Fibonacci to find where your exit is going to be in the future. Yeah, you can actually predict your profit target based on what Fibonacci pullback you were received on the retracement, how far back the ratio was. There is a different profit target for a 382 Fibonacci retracement than a 618. So I'll cover that in another video. In any case, my name is Wayne McDonald. I'm the Chief Currency Coach of FXBootcamp.com. This was a presentation for the daily FX audience on how to improve the timing of your trades.